Good afternoon. Welcome to LBMA webinars. Today we have a very special webinar for you. LBMA is presenting a webinar in partnership with Nasdaq titled LBMA Trade Data, how, why and where to access the data. As I read this now, I realize there is a typo and I do apologize for that. We have three panelists today: David Gornall, LBMA Senior Advisor, who will be hosting Rhona O'Connell, Head of Market Analysis, EMEA and Asia Regions at StoneX Financial Limited, and Donal Larkin, Commodities Content Specialist at Bloomberg LP. Before I hand over to them for the webinar, just a little bit of housekeeping. If you have any questions throughout this webinar, please enter them into the Q&A function at the bottom of your screen. There will be time at the end where we hope to answer all the questions that do come in, and we'll indicate this with a slide. If you have any problems, if you can't access it, can't see it, don't know where to find it, just email us at ask@lbma.org.uk and we will get back to you once we've spoken to the panelists. So without further ado, David, over to you.
Thanks very much, Taylor. I was just looking at the email that was sent out advertising this webinar and looking at the photos on it. So I do apologise, because we couldn't track down the three people that were pictured in the mail, and you've got us instead. So a little bit of a background to the subject today. So we've been publishing data for all four precious metals since 2018, since November 2018. And we've held a few of these webinars in the past, but we have been asked by quite a few of you to explain the Bloomberg offering in more detail. So what we're going to do today is ask Donal Larkin of Bloomberg to answer some of your questions. And also to give it a bit of context and meaning, we've asked Rhona O'Connell, who I think a lot of you know, to come and do some analysis basis the data that we can see there. So the trade data is gathered on a daily basis from all of the eligible full members of the LBMA, and that amounts to 56 reporting entities. And this data is aggregated by Nasdaq to form the daily report, and that's published around midday each day. And what you get is 16 sets of data, which are published, covering four metals: gold, silver, platinum, palladium, and in relation to the four subgroups, which is spot, then forwards and swaps, then options, and then the last category of lease, loans, and deposits. So what we're going to do is we're going to start with Donal, who's going to take us through the on-screen Bloomberg offering. And then following that, Rhona's going to run us through her take on this and what she's learned. So I'll hand over to Donal, who's going to show you where to find it.
Thank you very much, David. Well, thanks for having me on the webinar. First of all, very keen to get involved and to help showcase the LBMA Nasdaq offering on the Bloomberg terminal. So first question first, how do you find it on the terminal? Well, we've got an LBMA homepage, which is available under the LBMA Go function. So just type LBMA into your quote line at the top of any of your Bloomberg screens, and you will be presented with this particular screen. We've got a few things going on this page, which I'll just take you through very quickly. We've got the gold and silver pricing, both of which are fed by ICE. We've got the platinum palladium pricing, both of which are fed by the LME. And then what we're here to talk about today is these two sections, which is the LBMA Trade Data, which is fed by Nasdaq. And we've got two kind of flavors of that data itself. First of all, we've got the weekly data, which is available to all users, any Bloomberg users, free of subscription. Like David said, we've got these across the four precious metals, as you'd expect: gold, silver, platinum, and palladium, and across the four different instrument types: swap forwards, options, loan lease deposits, and then the spot markets as well. So each of these pages are gonna kind of look identical to each other in terms of this. We've got this grid style format showcasing, like I said, each of the instruments, each of the instrument types, each of the metals, and then the tenor that it relates to on the left-hand side. Next, we've got the daily data. I should mention the weekly data is updated on a 3-week lag and obviously updates once per week. In contrast, we've got the the LBMA Trade Data on the daily frequency, which is a subscription-based product. Very similar sort of format and layout here. I'll load it up just to show you really quickly. The screen will finish loading. Exactly the same as you've seen before. The only difference is of course, this data updates every single day, roughly around the 11:30 a.m. mark. For anybody that wants to find out more about the information itself presented on this page, we've also tried to populate a few helpful links and resources for you. We've got a rather beautiful LBMA trade data brochure, which the kind folks at Nasdaq have helped to put together, which helps to showcase the full offering in more detail, a little bit more information about the instrument types, the ticker codes, and the prices. And then we've also, like I mentioned, this is a subscription-based product. So how do you find access, or how do you get access to it? You hit this node here for a click for access information, and you will get taken through to this subscription-based screen, which will showcase this is what the product is, this is the current price. You can find out related products that are offered by Nasdaq. And then most importantly, of course, you can go and request the access itself and get through to a terminal rep who will be able to help you subscribe to the content, and then you will be able to access the data. And then very quickly, just as a quick overview, I mentioned that this page is populated, all the LBMA related pricing and volumes data sets are fed by a couple of different exchanges. So there's information with links to find out how to access any of these on this final node of subscription information summary. So David, does that answer your question? How do you access the data?
No, that's great. Thanks ever so much, Donal. I think one of the questions that most frequently gets asked of us is, can we look at a product such as gold over a time series of 3 months? So how do we set up a bespoke analysis? Can you enlighten us on that?
Sure, absolutely. So let me just split my screen into two here really quickly, just for the sake of the demo. We can load up, we can load up anything you'd like, but let's take silver as an example. And as I mentioned before, this looks very, very similar to what we've just seen. The only thing we're going to do this time is we're going to load up some of the tickers, and we're going to load up some of the functionality so you can get to grips with what the data is, how do I play around with it, how do I interact with it. So let's take some of these, and we're just going to click and drag each of these individual columns into the other screen. So now we've got that ticker loaded. All we need to do is tell Bloomberg what we want to do with it. So if I want to find out more about this, I want a description of the product. I'm just going to run DES go, and then I'll find out a little bit more information about the source, the last updates, the units, the ticker long name, just a little bit more descriptive information about what is this that I'm actually looking at. If I wanted to start interacting with the prices and start analyzing those, there's a couple, well, there's literally tens of different ways to do this on terminal, but I'll keep it relatively straightforward for the sake of this demo. If I wanted to look at what the time series was doing in a table format, I'm going to load HP, which is for historical prices. Of course, what we're looking at here are trade volumes, but it's just a kind of nomenclature of how we load up these functionality. So here we of course have the last couple of updates from the for silver swap for total volumes. So there's historical price table, and then if we want to see that in a graphical format, super easy to do. We're just going to load up GP, which is for graph prices. Again, of course, these are volumes, not prices, but then we can showcase the full history of this data set. You can scroll back to see to load up further history. And then you can interact more so with the prices here. So say as a super quick example, you wanted to overlay this with what was the total market doing. We can click and drag in another one of these tickers, and it gives you a couple of options as hover over widgets here. So you can either replace this graph for the total spot, silver swap or silver volumes, or you can add it and compare the two. So you can see the kind of correlations between the two over time. Similarly, you could zoom in on any individual time period that you might be particularly interested in and go from there.
That's great. I wasn't aware you could do that. So hopefully that's helped a lot of people watching. The other thing that we understand about the typical work of a metals analyst is to look at it in an Excel format. And we've been asked if you can show us how to do that as well.
Absolutely. Let me just bring up an Excel table or an Excel sheet. So this is just a plain worksheet. And let's just take a new example for the sake of it. Let's look at, say, Palladium instead this time. So we've got the LBMA function loaded up. We've got our grid here on screen. And then in the very top right, you're going to see this little logo, which you can click and drag into Excel. And all that's going to do is populate each of these tickers that are showcased in the same grid. So super easy to get the data into Excel. Next off, you might want to look at, okay, well, how do I actually interact with the data within Excel? A couple of different ways that we can do this. Maybe the easiest one to showcase on this call is by going to your Bloomberg tab within the Excel ribbon, and then loading on the left-hand side, there's something called the spreadsheet builder. We'll wait for that to load up. Here we go. And this will give us a couple of different options here, but the one we want to look at for now is just a historical data table. So we'll go into that one. So now it's just going to ask you for what securities do you want to pull into Excel using the Bloomberg APIs. So all we need to do is select our time series that we want to look at. We can click and drag that full column into this cell, or we can use the search function here on the left to find the exact tickers. But you hit next, and then it's just going to ask you for the various fields that you might want to pull in for this data. So if we were to look at, say, the last price, again, caveat that this is, of course, volumes and not prices. We can click and drag and add that in, hit the next. Now it's asking us to confirm what time range we want to access this data for, or we want to pull in, so we can change all that. So let's go from the 1st of January. Hit next, and the last button you'll have to press is, well, we can finish it here, but you can see the data in a couple of different formats. I think it probably makes sense to look at this kind of in portrait mode rather than landscape mode. Hit finish, and what we should get is this rather beautiful populated Excel table with all the various Palladium data sets pulling in the last prices since the 1st of January. And then very quickly, the last thing I'll show you is how you can interact with the data in Excel without using the spreadsheet builder. So we'll just take the exact same example. We'll pull in the list of tickers, and then using the Bloomberg BDP formulas, which again is just a way to kind of customize exactly what you want to pull in within Excel. We can do a few things here, like we'll pull out the ticker long names, so we know exactly what we're looking at within each row. We'll pull in, say, the last time each of these data sets updated, which is PR024 field. And then we will pull in the last update, which in this case is under this last price field again, which is here. There's tons of ways you can kind of interact with the data within Excel, and tons of ways you can customize exactly what you want to pull in. There's a full library of what fields are available and how you can access each of the codes within our function FLDSCO, just for fields, and then that will help clarify the exact codes that you need to pull into these BDP formulas. But if any of this is too complex, please do reach out to us at Bloomberg. You can press the F1 key on your keyboard twice, or on a Bloomberg keyboard, help twice, and you'll get through to a help desk representative who can help you work through this super simply.
Donal, that was a great job. Thanks ever so much. And of course, if you do want to play this back at any stage, it has been recorded, and it will sit on the LBMA website, so you can play it and pause it and replicate all of the actions that Donal's just shown you. So again, we hope there was a lot of value in what you've just learned there. So that's great. Thanks ever so much. So now we're going to bring in a bit of data analysis from some of this data. So I'm going to ask Rhona to tell us something, I think probably relevant to talk about all four metals and what she's learned and what this data's telling us.
Thank you, David. And thank you very much, Donal. That was fascinating. I have to say, I'm continually impressed by the sophisticated technology that Bloomberg have put together. It's absolutely invaluable for us analysts. And thank you very much for the invitation to speak with you today, and welcome to everyone who's on the call. As David said, I'm going to just put a little bit of historical context into some of the moves in the volumes in the gold, silver, platinum, palladium metals, using obviously data which has been generated from the LBMA data and Nasdaq, and which the Nasdaq people have very kindly put into graphical form for us. So hopefully you can see my screen showing the XAU total volume. We've just got total spot at the top and then spot and options down below. And what I've done is to highlight three different, as far as gold is concerned, three specific occasions when we had high volume, and we're going to have a very quick look at what it was that was generating those volumes. And one thing that will come through with all these metals is that it's relatively rare for exactly the same sets of parameters to fall into place more than once. There's always going to be a little bit of variation. But the other thing that I thought was interesting, worth pointing out, is something which I've been aware of purely on an anecdotal basis through conversations with dealers over the years. But these figures actually allow you to quantify, or at least to be able to eyeball, the fact that on very many occasions, it's not foolproof, nothing ever is, but on many occasions you will find that when there's been a spike in volume, it almost invariably signals a turn in trend. You see, we've got 1, 2, 3, 4, 5, 6, 7, 8. I think I've spotted 9 here. There's probably more, but some of them will be statistically insignificant. But it works right the way across the board. And I just thought I would highlight this for you. And it's frequently reflecting a change in sentiment, people coming into the market, people coming out, which makes a lot of sense. You get a lot of positions changing as sentiment changes. So that's something that's definitely worth watching, and certainly I find it useful if I'm looking at numbers to see the extent to which we might find a trend reversal, or at the very least a correction coming onto the horizon. But just to look very quickly at some of the events that we've got ringed here, and I'll do it on a chronological basis. The first one was the 12th of March 2020. And this was basically with COVID-19 taking a grip and lockdown announcements spreading through the system. Also, this is the point at which logistical problems were starting to hit the gold market, and also platinum and palladium for that matter, because I'm sure everyone on this call will be aware that the primary mode of transport for those three metals is airborne, and usually on passenger aircraft. And of course, by the time we were into the middle of March, passenger aircraft or passenger flights, I should say, were very few and far between. And certainly at one point, there was only one flight going from Singapore into Zurich per week, and all the banks were sort of scrambling to get their metal on board. So this was one of the areas where we'd seen a lot of volume coming through. And also, there was a move on the part of risk managers to ask, and this is within the banks predominantly, to make sure that their exposure in the futures was pretty well covered by material in COMEX warehouse. Because although COMEX active months very rarely come to delivery for 3-4% is the top, very, very rarely more than that. But risk wanted the metal on site in order to make sure that there wasn't going to be any problems. So there was a lot of trading going on around that with swaps and all sorts of different things, trying to make sure that the metal would eventually get into the proper warehouse for delivery, and indeed it did. So that's the first one. This is when the panic is starting to take hold. Second one, price is actually starting to turn down, and this is when you've got the equity markets improving rapidly, not least on the back of the company Novavax announcing that they were starting human trials with a vaccine. And you got a slight rise in consumer confidence accordingly. And at that point, gold actually went into a mild back, with the June contract dropping to below spot. And then here, which is the final week of July, which was the largest ever trading day on the 29th of July at $174 billion. That was driven by swaps and forwards for a weekly turnover of $530 billion. All-time high gold prices the following week. The background was the Fed confirming that it would continue to add liquidity, which generated, again, a little bit of confidence, put pressure on the dollar, as indeed it has practically every time we've been talking about stimulus packages, and those conversations persist to this day. And then in the background, also fueling the fire, was increasing tension between the United States and China over Hong Kong legislation, and, to be fair, quite a lot of blame game over the coronavirus. The end of the rally actually became self-fulfilling, because by that stage you had the momentum traders on board as well. So if we look at silver, see, similar thing. It's harder to point out inflections on the silver price, because the ratio of the we go from $11 up to 31 here, so it's a factor of 3, whereas the gold chart was a factor of only 50%. So take it on trust from me. There are changes. You can see the turnaround from bear to bull here, mild one here, mild one there. Then we've got some more volatility coming through, and particularly the antics in the market in the first month of this year. Very quickly, the spike here at the end of February. This was essentially silver trading in tandem with gold, and in its usual more volatile fashion. Gold at this point was starting to be sold off in order to raise cash for distress and margin calls in other asset classes. And as is usually the case, it swept silver down with it. So it wasn't a silver-centric move, it was much more related to gold. On the 21st of July, which was the largest day for options up to that point, at 74 million ounces against an average daily volume of 13, silver gained almost 7%, with the September contract getting up to 21.56. This is the financial sector. This is agreement in Europe this time over the 2.1 trillion budget and virus relief plan for fiscal stimulus. And negotiations were also starting on further US stimulus. And that, again, started to pressure the dollar. And it also started the chatter that we're seeing in the markets now about inflation, which is not a topic for this forum, but it's certainly something of widely differing views. And then the final one for silver here, this is silver-centric, and this was the so-called short squeeze, driven by retail investors looking to play the option side of the SLV, the iShares silver fund. And as is so often the case with silver, it was a vicious, violent move, and it really didn't last very long. And that is absolutely characteristic of the silver market. And for platinum, what we have in the last week of February is the pandemic sell-off. That won't surprise anybody because of platinum's industrial base. The second one is the second largest trading day at $3 billion, with platinum hitting 1,288. And this is a correction after that strong rally, which had started I'm sorry, I do beg your pardon. I've skipped for February 2021, forgive me. Yes, we hit multi-year highs at 1288. And this is the correction after that rally, which started in November, when platinum was down at $853. And the gain from bottom to top was 57%. And we saw a 24% gain just from 4th to the 16th of February. Now, if you'll bear with me, we'll come back to mid-March 2020. And that was the multi-year low, with average trading volumes at 2.3 million ounces against an average of 1.4 more normally. And this was the start of the recovery on the expectation for the implementation of the first stimulus plan. And also, Amplats, who were having technical problems down in South Africa, they had a big outage at the ACP Phase A plant, and then 2 more at the Phase B. And it was at this stage that they announced that their guidance for output for the year, the range was going to be staying the same, but they were very much looking at the bottom end thereof. And that also helped to turn the market around a little bit. And then finally for palladium, again, we've got all these areas where you get spikes heralding turns and trends, or at the very least corrections. And 3 more examples for you here. And these I will get in the right order, I promise. First one, 17th of January, that was the largest daily turnover at $5 billion. and the largest day for options trading at about 400,000 ounces. And this was the final surge in the massive bull run that Palladium had been enjoying for at least the last 18 months or so, driven predominantly by heavy demand buying. This is China very largely, and that was over the course of late 18 all the way through 19 and into 20, and that's ahead of the emission limits changing. There are diesel emission limits changing this year, which affects platinum, but more importantly, as far as palladium is concerned, we go into China 6B in 2023, under which the permissible level for unburned hydrocarbon emissions comes down, and that is the set of gases for which palladium is the most effective. That is coming down by 40%. And it's absolutely typical across the world, it's not just China, for automakers to want to be ahead of the curve when these emission changes are coming through. And we do believe that this was preemptive stocking. In addition, on the other side, supplies were tight, especially in Zurich at that point. And also we had load shedding from Eskom in South Africa, and that didn't help sentiment. Although generally speaking, the miners in South Africa tend to be ring-fenced from power cuts where it's possible for obvious reasons. Moving forward to mid-June, this is the largely daily volume by ounces, and this was another upward surge. And again, we've got China demand in the spotlight, with the mining companies going public and saying that Chinese demand had come back to the pre-virus levels. And so they were sending metal there and actually diverting it away from Europe and US, where the auto sectors were flat on their backs. And then finally, we come on to early January 2021. And this obviously was a recent spike in aggregated trading to $4 billion worth of turnover, again, driven by spot. And this was correcting off the top of the rally that had been still partly driven by China emissions limits, and the growing optimism over renewed travel, and expectations which are going to be fulfilled for new green economic policies from President Biden. So that's a quick canter through some of the different fundamental elements, and you'll see that it's very rare that the same sets of parameters coincide. So there's always something interesting to look at from an analytical standpoint. So with that, David, I'll hand back to you.
That's great, Rhona. Thanks ever so much. You learn something new every day. So, I mean, how do you use this within your role? How does this play a part for you, Rhona?
Oh, well, every tool in the toolbox is a welcome one. And in the past, all we really had to go on in terms of turnover, apart from anecdotal evidence from the desk, would be COMEX numbers. Whereas here, and COMEX numbers, obviously they're released daily, but it's a very different animal from spot and forward trading. And so to have the numbers for the more flexible over-the-counter exercises it is actually very useful. It's very helpful, and particularly if you don't try to be too clever, because that way you get caught out. But if you do see a big surge like that, as I said at the top, it does make you look for corrections or changes or inflections.
No, that's great. Well, I think we've got a couple of questions that have come in. And I think I'd just like to say one thing, that we've talked about volume here. Somebody was asking about prices. Generally speaking, this isn't covering the price data in the Bloomberg report. I believe there is a report that goes alongside your subscription to this that you can obtain from Nasdaq, and that looks at prices in tranches. So that there are no time and sales tickers as you would find on the futures side. So I hope that clears it up. Another question: do high volumes generate a wide intraday price range, Rhona?
Generally, it's the other way around. You'll see much more volatility in thin markets because it won't take so much pressure for a price to move in either direction. If you've got a lot of turnover going through, and when I was looking at these charts, I was looking at intraday ranges. Quite often, you will find that the busiest days actually have the narrowest ranges because you've got a lot of buyers and a lot of sellers, and it tends to keep things more liquid. It's thin markets which have big price ranges, not exclusively, but as a rule of thumb.
Okay, thank you. So I think the next question is: do you expect a repeat of the retail investor surge in silver?
Love it. I doubt it. Some people have made money. I suspect a lot of people will have lost it. Silver is, I love analyzing the silver market because it can be so much fun. And I know dealers who, but I couldn't deal anyway, but I would hate to trade it. And I know dealers who love it because it can be so much fun and so volatile, but they wouldn't like to analyze it. At the risk of sounding a little bit pompous, a little knowledge can be a dangerous thing. And from what I read in the press about the nature of the beast that was trading in the markets through that period in January, they were talking about, there was one headline which said the biggest short squeeze in history, or something to that effect. And there was a fundamental error in the analysis, which I suppose is understandable if you're not an expert in the market. People were looking at the outright short positions on COMEX and formed the view that there was indeed a big short position out there, whereas in fact, I'm sure everyone on this call will know, but this is a banking financing exercise. So if the banks are long the physical, they'll trade through the EFP and hedge it on the futures. And so it's more or less neutral. So that was the miscalculated premise on which the move went through. And then silver being silver, at the risk of making an awful pun, it does tend to turn on a sixpence. And I've seen this, I'm sure David has too. I've seen this many times over the years. It's like Cinderella. It comes to the party with a big splash, having been under the stairs for months. But when she leaves, she tends to leave even quicker than she arrives. So I suspect a lot of retail people will have been frightened off. But there's absolutely no reason on earth to say that we're not going to see more volatility in the price, because it's just inherent in the nature of the metal.
Great, thanks very much for that. And I think the last question I'm going to have a go at. So we're being asked what kind of options are covered and are strikes included. So again, there is a supplementary report which shows the strikes in tranche. So for example, I think you'll see them in probably $50 increments in gold. And it will give you the total aggregated amount for that tranche and in that time series. It's for all four metals, but when the members decided to put this data out there voluntarily, as they thought, and we agree with them, that the options that should be included would be plain vanilla calls and puts. We didn't want anything too esoteric in there. So it's just a bulk standard vanilla options that are covered in there. So I think we've got to the end of our list of questions. So thank you ever so much, Rhona and Donal. I hope this has all been valuable to everybody on the call. As I say, it has been recorded, so you can go back and look at it again. And I'm going to hand back to Taylor, who's now going to give you some information on the next in the series of LBMA webinars.
Thank you very much, David, and thank you to David, Rhona and Donal again for joining us. It was a pleasure to have you on the webinar. As you can see on your screen, if you do have any questions about anything that you've seen today, please email us at ask@lbma.org.uk. I do know that in our post-webinar email, we will be issuing you a few documents, but if there are any other documents or information that you do want from this webinar, please just email us and we can get that across to you. And moving on to our upcoming webinars, we have on the 4th of March, the Chinese gold market in the year of the ox. So we have Jeremy East, Johnny Teves and Roland Wang of the World Gold Council. And on the 18th, we do have highlights from our upcoming conference. So it will show a summary Q&A from that particular event. I hope that you can join us if you haven't already registered. And then on the 25th, we do have our digital gold webinar. So this is part 4 in the series, and we will have emergent tech and MoneyGram, and that will be hosted by LBMA's Sakila Merza. So I do hope that you can join us for those. And with that, I thank you, and I hope that you have a very lovely Thursday afternoon and a very lovely weekend. So thank you to our hosts.
Thank you.
Thank you.
Thanks, guys.